Everyone has to live somewhere, and everyone has to invest their money someplace. So what happens when where you live meets up with where your money is invested? Hello, real estate. Hey, welcome back, everybody, to Big Money Real Estate. I'm Elise Flink. Here's today's update. So Darren Bloomquist is back with us to revisit a topic he and I discussed back in February of this year, zombie foreclosures. Now, here's a quick refresher on what qualifies as a zombie foreclosure. These are homes that have been vacated by the homeowner after the foreclosure process has already begun. So during the foreclosure process, which we all know can take up to several years in certain cases and in certain states, the property gets little, if any, attention and can fall into a zombie-like state of disrepair. Neighbors hate it. According to Realty Track, where Darren is the vice president, zombie foreclosures sell on average for 22% less than owner-occupied foreclosures. So the banks have a huge incentive to keep homeowners in a property until the foreclosure is completed, and that's why they used to pay people to do that. And investors should see these properties as especially well-priced opportunities, assuming, of course, that they haven't fallen too far into disrepair. That just portends a huge recovery bill. Darren has all the stats for any investors looking to capitalize on zombortunities. Wow, that's a good pun. In the foreclosure pipeline. Welcome back to the show, Darren.
Thanks, Elise. And I can't take responsibility for that new word being coined.
Zombortunities. My college freshman would love it. All right, to the report at hand. The Realty Track Zombie Foreclosure Report came out for the second quarter of 2015. So how have the numbers changed since we last had this conversation 3 months ago?
Sure. When we look at the nationwide numbers, the zombie foreclosures, these vacant, abandoned foreclosures, are down nationwide from the previous quarter, which is when we last talked. We saw 127,000 properties nationwide that fit this category as zombie foreclosures as of the middle of the second quarter of 2015. Compared to the previous quarter, when we look back to the first quarter, it's down 11%, and it's down 10% from a year ago. So those numbers are going down nationwide as more and more, there's two reasons for that, basically. There's more areas where foreclosures are continuing to decrease, so there's just fewer opportunities for these zombie foreclosures to pop up. And then the second reason is we are seeing states and counties and other local governments take on these zombie foreclosures, and we're seeing some of those policy efforts actually have an impact and reduce the number of zombie foreclosures, at least in some markets.
So I'm still on this number that 24% of all foreclosures, there's a little bit more than 500,000 foreclosures or homes in process of foreclosure. A quarter of those are these zombies where they've not gotten any attention. They could have been sitting there vacant for a couple of years. They need a tremendous amount of work. I mean, that's a little bit scary when we've seen a lot of recovery and homes just get snapped up.
Yeah, these are the homes that have been left behind in the recovery, I think. And interestingly, I'm glad you pointed out that 24%. That number has come up. Even though the raw number of zombie foreclosures is down, they are a higher percentage of all foreclosures. A year ago, it was 20%, and now we're at 24%. And so what's happening is the properties that are still lingering in foreclosure are the ones that are more likely to be zombies nowadays, because they've, it's a bit of a self-fulfilling prophecy. They've been there for so long, it's more likely the homeowner has left and moved on, and the property is vacant.
So we've got the highest rates of zombie foreclosures in states like New Jersey, Florida, and New York. At least New Jersey and New York are judicial foreclosure states, so that goes through just a long process. And we've seen homes in those markets, I want to say they've been in foreclosure 2, 3, 4 years, some of them. Is that right?
Yeah, the average time and the average time to foreclose had been going down a little bit in New York, but it spiked back up in the first quarter. The average time is a whopping 1,475 days, 1,475 days, which is over 4 years, and that's the average.
Yeah.
We hear from local agents that definitely over 5 years is not necessarily out of question with some of the properties that they're seeing that have sat in foreclosure for a long time. Well, and New Jersey is second place with they're more like 3 years, between 900 and 1,000 days on average. to complete a foreclosure there in New Jersey, but it's the second highest of any state.
What's going on with Florida? Because I didn't think Florida was a judicial foreclosure state.
It actually is judicial
Is it?
foreclosure, but even though it feels a little bit differently because it's very similar to some of the other states in terms of the patterns that we saw during the housing crisis, some of the non-judicial states, but it is judicial. The average time to foreclose there is over 900 days. It's number 4 in the country. Hawaii is stuck in there in between. We just don't see a lot of foreclosure activity in Hawaii. But to suffice to say, the one good sign in Florida that's different than New Jersey and New York is we're actually seeing these zombie foreclosures decrease pretty dramatically from a year ago. We're down 43% in terms of the total number of these zombie foreclosures, but it's still a fairly high percentage. 26% of all foreclosures in Florida are these owner vacated foreclosures. So there's still a high percentage of them, but the numbers are going down there. I attribute some of that to the fact that the legislature in Florida enacted a foreclosure fast track legislation a couple of years ago that allows lenders to push through vacant foreclosures faster, and that seems to be having an impact.
So one of the things that strikes me as pretty obvious is if you've got a house that's taking 3 years or 4 years or 5 years to get through foreclosure, and you're in a state like Florida where the owner has left and now you've got a lot of hot, humid weather, are those houses even going to be livable anymore? I mean, you've got to have mold growing basically everywhere. And when we talk about, having enough cash on hand to redo it, are we just talking about gutting these houses, taking them to the ground, so basically all that's left is land value? Even in places like, New York or Chicago or Dallas, you have summers over the course of 3 years. You're going to have 3 hot and humid summers where I don't think anybody's turning on the air conditioning.
Yes, these houses are in bad shape after 3 or 4 years of sitting through the harsh winters in some cases, or the muggy summers in other cases. And when in talking to folks, these are not. The irony is that if the banks had pushed these through and been able to foreclose on them faster in, say, 6 months or a year, they would have been in much better condition and would have sold at a much higher price point. Now, 3 or 4 years later, they are in much worse condition on top of the environmental damage and deterioration of the properties. In some cases, you have these properties are targets for vandals. The copper wiring, the copper piping has been removed. And so these are in bad shape, and really a lot of them, not every single one, but a lot of them are in bad shape and are going to be selling at highly discounted prices because of that, unless the bank wants to sink in quite a bit of capital to rehab the property.
Well, they're not in the business of rehabbing properties, right? We're not going to see banks step in there. So what's interesting on the report was this average market value of the owner vacated zombie foreclosure. In the second quarter, it was about $195,000, almost $196,000. It's 78% the average market value of owner-occupied foreclosures, which is $251,000 and change. But that number is a little bit off, right? Because if you're talking about a house that's got mold all over it and is in terrible shape, it's going to take a whole lot more than $50,000 to straighten that thing out. So I know that that's probably average, so you've got some below and some higher, but what are you guys seeing in terms of worst case scenarios? Are these banks actually waking up to the idea they just have to let these properties go? And is anybody running into that 5-year foreclosure timetable issue where you've taken a property back, you've got to turn it over and get rid of it, typically within 5 years?
Yeah, those are great questions. I love them. So on the first issue, the 78% market value, that's really based on, that's more telling you about the location of these properties and the condition. And so the location of these zombies tend, unfortunately, to be in areas that are already somewhat depressed in terms of home prices. But then if this is an automated valuation model, it's called, to estimate the value of the property. It's probably, in fact, I'm sure it's not taking into account very specific property conditions such as mold.
Sure.
And so that's going to, the 78% is just based on that property's location, what other properties in the area are selling for, if you add on a bad conditioned property, that's going to be an even bigger hit on the value of that home for that case. And then to the question about the 5-year time frames, I think we are starting. That's, I think, one reason that we're actually starting to see these zombie foreclosures go down is because the banks have been forestalling and for a variety of reasons not completing the foreclosure process on some of these zombie foreclosures. But now they need to, otherwise they're going to go past that statute of limitations in some cases.
Right.
5 years in Florida, I believe it's 6 years in New Jersey, and so they're going ahead and pushing these through and foreclosing on them and taking them back, which is helping to reduce, at least in places like Florida and Illinois as well, the number of these zombie foreclosures.
Did you in the numbers count any of the HUD homes?
Yes, those would be included. I mean, we're looking at any property that is in the foreclosure process. Now, a zombie is specifically it's not a HUD home because we're not counting those that have been repossessed by the lender at that point and for instance, taken back by HUD. At that point, our assumption is the bank is going to at least maintain the property to a certain level and eventually sell it once they repossess the property. These 127,000 specifically zombie foreclosures haven't been taken back by the bank yet. They're still in that limbo where the homeowner technically owns the property, but they've left and the foreclosure process has started. And so nobody is really taking responsibility for maintaining and updating the property.
Crazy. This is just craziness that we're still facing this 8 years after the housing crisis happened, and it's craziness. But a good opportunity for investors. Darren, thank you. That was really helpful, I think.
Yeah, thanks, Elise. It was great to talk about.
Darren Bloomquist is Vice President at Realty Track. He's a frequent contributor to the show. Darren, are you going to NARI this year, National Association of Real Estate Editors?
Yeah, I'm absolutely going to be there. I guess that's coming up in a couple of weeks already.
I know. It's like the last.
At the end of next week.
Yeah, right? I think the end of next week, the third week of June. So, well, I will see you in person there. Thank you again for being on the show, and thanks to everybody for watching this episode of Big Money Real Estate. We are working to keep you informed on the latest real estate trends so that if you are an investor or you want to be an investor, you're going to be a better informed and better equipped investor, and I hope you're making smarter investments. So send me your real estate investing questions on Twitter and Facebook. Don't forget to share this video on all your social media. I'll see you next time. I'm Elise Glink.